Happy Monday. Welcome back to the final hour. It is 3 p.m. Eastern Time on the 3rd. Let's get started. Let's talk about a little bit of everything. Day was pretty quiet, which actually was perfect. I've got some trades, SPX winner, SPX winner, /ES winner. Took some profit today on a kind of a campaign trade. This year it was a diagonal spread, TLT winner. So adding up nicely to kick off the week. Taking a look at the P&L, up around $8,700 for the day. Yeah, TLT, I took about half the profit. I did the math this morning in one of my live sessions. Here was the trade. I'll just revisit all this stuff. Daily profit play was nice. We took the trade together live. We waited a little bit longer. I want to see if there was a reaction to the 945 ISM numbers. That was this morning. And we didn't really have much of a reaction, so we went ahead and took the trade. Services PMI came in a little bit softer. Revision was slightly positive. Manufacturing PMI came in a little bit softer. Overall price action on the day, fairly quiet. Here's the SPX for the day. Very quiet. Very little movement, honestly, from high at 57.25 to low around 57.03. We're talking about a move of around $20 today. So perfect in my opinion. For melt up would be fine if it happens. I'm still playing a little bit of protection. I have a couple of trades out for tomorrow and kind of the end of the week, end of the quarter, end of the month. Looking to see if we actually have some type of move back down to fill either the FOMC low or the gap fill that we saw from this would have been Monday to Tuesday from the 16th and 17th. So that's on the futures market. So I'm trading a little bit of ES for E-mini futures. I'm trading SPX, NDX quite often. But overall price action today, let's go to SPY. This is my analysis that I was looking at for the week. Markets just kind of hanging out. We have a Thursday high at all-time highs. We have a Wednesday low from FOMC, post-FOMC during the announcement. And I'm looking to see if price kind of stays within this range for the week. Not a bunch of major catalysts except for possibly Thursday's Fed speakers. If we go back to the economic calendar on Thursday, so what else do we have this week? We have Reserve Bank of Australia expected to keep rates the same at 4.35%. We have U.S. consumer confidence tomorrow morning at 10 a.m. Aussie CPI Tuesday night. Wednesday, pretty quiet day overall. Thursday, coming into Fed speakers, we have the Swiss National Bank giving us a rate decision, expected to cut rates by 25 basis points. Hopefully, I will start to see another little jump in my portfolio for the Swiss. Right now, I'm looking at the euro, weakest today. Dollar, let me make sure this is highlighted. So euro weakest today, dollar second weakest, pound. Then we have yen at baseline, Swiss right next to it, CAD New Zealand, or I'm sorry, CAD Aussie New Zealand on top. So easy trades today would have been, looks like euro New Zealand to the downside, euro Aussie to the downside. New Zealand dollar up, Aussie dollar up, something along those lines. Let me see where I'm at for my P&L. Okay, I've got some decent P&L running on those Swiss crosses. I've collected about $7,000 in carry since 2023. That's not too bad. That's like slow. That's slow dripping with about a 3 to 4% swap since early 2023. So I'm almost a year and 3/4 into that. But it's certainly better than losing. So I don't mind holding dollar cost averaging into certain Swiss positions, which I've been in and pretty active on for a while. But that's today's currency strength. I did look up, I posted this in my Telegram. It was approved last week. This news came out on Thursday or Friday last week. But the Bitcoin ETF, this is BlackRock Spot ETF IBIT, was approved for options. We're still waiting for the OCC and CFTC approval before it officially goes live. I don't have a timestamp on that. I told traders this morning I'd look a little bit deeper to see if I could get into, maybe that's a new, trade strategy campaign that I want to run, which is, how would you like to own Bitcoin for free? We could have some exposure on IBIT. We can learn how to trade it, generate options above and below, generate income, and just figure out how to calculate a break-even level and effectively own stocks for free if we do it right and do it actively. So that's kind of a big interest of mine since I do have some exposure on IBIT. I've been trading BITO because it is already approved for options. That's a ProShares ETF. And it's not behaving the same way as the other. IBIT looks a lot like BTC, MicroStrategy, Coinbase. They all look a lot like Bitcoin itself. If you go to the stock, here's Coinbase. Go to the daily time frame. Okay, I mean Coinbase doesn't quite look like Bitcoin. MicroStrategy does look a bit like Bitcoin. Bitcoin obviously looks like Bitcoin, but BITO has sold off a little bit more aggressively. IBIT a little bit more intact with what we see here. So anyway, I've got some levels that I've already purchased. When this thing first came out, we had that pullback. I bought in around $23, and I've been holding. There's a nice little return there from 23 to 41. I didn't take any profit. I was looking to see, perhaps this year if we had a run on crypto or Bitcoin, if we're going to 100K or better, and that would still give me some additional upside. So I did the numbers, roughly calculating a percentage return on Bitcoin. If we see Bitcoin hit 100,000, then that would roughly put IBIT up to a price amount around $57. And so if I own it, trading up towards 57, you can calculate your potential ROI right there, return on capital, return on investment. That's about a 60% upside remaining from today's price, give or take. So if that does happen, awesome. That's a spot price of Bitcoin going to 100K. If we see the same thing happen percentage-wise, I also wonder if MicroStrategy will do the same thing. So I do have some shares of MicroStrategy, also have some options around it, a lot of income trades, ratio spreads, bull put spreads, things like that. Let me actually see where my MicroStrategy is at. I might actually put another trade on right now if I can find one here. So right now in the portfolio, MSTR. Let's go to it. MSTR. I have 85 by 80s out to January. I'm going to go look out a little bit further. Let's go MSTR. Let's go to March. Let's go Q1 of next year. And I'm willing to own the shares. I would say anything under $100 is pretty attractive to own. Let me see how low I can actually push that cost basis down. So if I were to buy the 100 by 95 or even by 90, that's going to be a 285 debit. I could actually put in, let's go here for $1.50 and then put in a sell put at 65, generate some income up to about $200 of profit, own the shares. If I calculate the number here, I would get assigned at 65 minus the $1.95 minus another $5. I would own shares of MSTR at 58.05. 58.05 would be from current price. 58.05 would be around a 62% discount from current price, and we would be owning shares around 70% off of the all-time highs after the split. So we had a 10-for-1 split on MicroStrategy. I think it made it a little bit more attractive to buy. So I don't mind it. It's a lot like trading Bitcoin. So it's one way to have some exposure to express that I'm kind of long-term bullish on Bitcoin without tying up a bunch of capital. So if I take this trade, it's going to set me back around $2,900 in buying power. Return on capital would be around 8 to 9% if nothing happens with assignment. If I take assignment and I can get a 70% discount, and then look at this thing getting back to all-time highs. I mean, that's a 250% gain. Not too bad to actually take on some shares. So let me see if I can. Let's go 70, 265 in income, 290, $1.30. That's actually not too bad. That's not a big difference. So $2, 29, 25. I'll do this. I'm going to do the 100 by 95. Let me see where the 100's at. 100 is down near these lows. Yeah, that's a pretty good spot for something to break lower. Hey, Keith, how are you, man? Happy Monday. Nice to be live with everybody. All right. We got some traders tuning in from YouTube, from Facebook, from Twitter, possibly on Twitch. and this will run, I'm doing the session each and every day. I know usually I was running like early morning sessions, but that's now reserved for one, my daily profit play in the mornings, where my members and I are taking some daily income plays, and then A1 trading at 10:15. Also looking to do a lot of live trading there, and so I thought I can kind of give this free time to everybody right before the close, see if there's anything worthwhile to discuss, recap the day, things like that. All right. So, yeah, I like this trade. So if I go after, let's see if I can get $2 for this. $2 for this. I'd still own the shares around 58 bucks. It's a little income play. I'll take it. And not filling it at $1.95. Okay, let's try $1.94 right before the bid. All right, hopefully I can get at least $1.90 for this. Filled at $1.90. Okay, cool. Filled at $1.90. All good. Filled $1.90 as well on that one. And that one. And this one. Come on now. $1.90. Let's try $1.89. Filled for $1.90. All right. Okay, so MSTR tracking. This is a March 21st expiration. So I'm buying the 100 put, selling the 95 put, selling a 65 put, collecting $1.90 credit. That is $1.90 tail credit and the ratio spread. Max profit on this one is around $690 max profit, and willing to own shares. So even though this says max loss at 58.11, that would be if I was assigned and then the stock went to zero, then I would take a loss on it. So that would be about a 2% loss. That's still very manageable, but I would intend on, if I get assigned, owning the shares and then rolling and using covered calls and other things to lower my cost basis. So if I'm willing to own it, let me just recalculate the number, 58.05. So if assigned, break even at 58.05. Okay, so that is going to be a new trade. I'm going to throw this in for my stocks and options in my Discord. There we go. And that's way down here. Starting this at a 100. So from 100 down to 65. That's my window. 100 by 95 bear put spread. 65 sell put to own. $1.90 credit. There it is. All right, so let me take a screenshot of this. There we go. All right. Throwing that in the alert service for Discord. There you go. Okay, little MSTR. Nobody's upset about that. SPY, still looking at a potential range. What type of outlier risk would we have for the rest of the month? This week with the Fed speakers on Thursday, unless they say something the market doesn't want to hear, I am trying to find, what the Fed is essentially doing right now is they're trying to pull a Greenspan and get this market to still rip with this late cycle expansion or this late cycle growth, similar to what we did in the late 90s. Again, I do think it's going to end poorly at some point, but who's to say where that is and when that is? And so if this 50 basis points cut is going to help, fix things, and I put that lightly, like fix things, the biggest reaction that I think the market will have to actual news that's coming out is going to be the employment news over the next couple of weeks. So this Thursday we have unemployment claims. If we look at the unemployment rate, we went to 4.2, 4.25, 4.2. This is coming in, you know, every month. So 4.2. We had our SOM rule activated, back in July. We're looking at unemployment claims as well. They've been steady, but they're not necessarily, jumping straight up. If you go to non-farm payroll, we have been trending lower. Okay. But if we see October 4th is actually a decent print, so this 114 to the 142, if we actually trend a little bit higher, the market can take that as a pretty good sign that, hey, employment is coming back, or it's still stable, it's still positive. The market can spin a lot of things and have straight on blinders to just be like, we're going higher. Um, I think it's crazy to think like how bearish people are right now when you look at what this market has been through and how it's performed over anything and everything that's been thrown at it. Yes, there's going to be outlier risk, and yes, there's going to be things that we can't understand. And yes, you know what? You want to know the reality? If we do have a market crash, it's probably something that nobody's talking about right now. Yes, we have signs of employment getting softer, but the Fed just cut 50 basis points. Does that help? Yes, no, maybe. But something that the market's going to latch onto, we're likely going to see like there's going to be some dents in the perfect armor of the market right now. But when it actually starts to break and price starts to roll over, you're going to see it in price. And the question is, are you, willing to have some protection now for the, next 3 to 6 months, and then re-up those for another 3 to 6 months and keep re-upping for the next 3 to 6 months? Because I'm not going long-term protection for like, 1, 2, 3, 5 years out. Like if I'm playing protection, I don't want it to cost an arm and a leg. So I'm going to play protection to anywhere between 1 month and 3 month cycles. And if I go a little bit longer, I mean, getting us out through the election into the end of the year. I mean, I've seen a complete coin flip of whether the market goes up for the next 12 months or down for the next 12 months. Arguments are, if the market goes up for the next 12 months, it's because we did cut near all-time highs. Anytime we've cut within 1% of all-time highs, the market tends to be higher 20 out of 20 times. Anytime we've cut within 2% of all-time highs, the market's higher 20 out of 20 times. Yes, this time could be different. I get that. But that's still a pretty good track record. And like I said, if Powell and the gang at the Fed are pulling something from old Greenspan back in the mid to late 90s, this market was partying like it was 1999, and it started to rip, and it was all the way until 2001 when the market finally rolled over. So I'm not interested in calling the top. I think it feels weird and uncomfortable that we are at these highs, and it seems like we got there from a very narrow, highly concentrated market, but that also forced a bit of a cleanse back in July and August. When we saw this recovery, this was actually a broader recovery. This recovery was a broader recovery. So the investments have gone from Mag 7 and semiconductors elsewhere. Right now, pop quiz, and anybody that's been following me for any time in the last 12 months, what is the current sector that is outperforming the market right now? What is the best sector from the S&P of the top 11 sectors? Which one is number one this year? Who can tell me? I talked about it this morning. If you check any type of financial updates, what's the market? S&P's this, Nasdaq is this, Dow's this, Russell's this, sectors reported green, red. What's the best performing sector this year? Okay, I'll give you 5 seconds to type in your answer. Best performing sector is, drum roll please, year to date, utilities. Guess nobody. Okay, utilities has been leading for the last couple of months. This is not led by consumer discretion. This is not led by communication services. This is not led by Mag 7 AI, okay? This isn't even led by the S&P. The S&P is up 19.5% year to date. This is not counting today's price action, but up 19.5%. We obviously saw that 10% haircut back in July and August. We saw that little 4 to 5% dip in early September after Labor Day. Utilities, 26.5%. Okay, gold is performing quite a bit over the index this year. So we have utilities at 26.45%. You have financials at 21.44%. You have communication services, which does include some of your Mag 7s. There's your Meta, there's your Netflix, which, by the way, Meta and Netflix, really aren't getting talked about a lot for Mag 7 because I don't know if Netflix is still a top 10 or top 7 or top 8, but Netflix is king of the streamers. And with more of their live events and content like crazy, it's like I like Netflix. I just want to get a discount. Speaking of Netflix, I wouldn't mind having some Netflix in my portfolio, but we're trading at $700. The IV is probably relatively low because it's been steady to the upside. But let's see what IV is. We're at 62. I could probably get something out of this that I like. Netflix has earnings on the 17th. So if I were to play this one out to, let's say, out 90 days, would I be willing to own some Netflix? Not necessarily at $600. Not at a full tranche at 100 shares. I don't have any interest in tying up 60 grand or 30 grand in Netflix. I would, however, gladly put in $5,000 dollar cost averaging, $10,000 dollar cost averaging. Instead of buying 100 shares, I would buy a fraction. I'd buy like a mini chunk. Buy 10 shares, buy 20 shares, whatever. But what I could do is I could orchestrate a trade, which I might like here. If Netflix were to come down, and we're sitting here at these all-time highs. Now there is a chance that Netflix beats earnings again, and everything's looking hunky dory for October onwards. Maybe not, maybe choppy. But my point is, if I could take some ownership, let's say from 600 lower, let's see what this looks like here. So if I go down to 600 and I buy the 600 and I sell the 595, that's going to cost me 72 cents to buy that $500 max profit debit spread. Now, where would I be willing to own the shares? All I need to do is cover 72 cents. I can do that right in here. Could I say I'd love to own Netflix around $500? Answer is yes, without a doubt. 550 is also not a bad spot. If I zoom out of here, 501, I would say I'd love to own around 501. Even if this is, and this could be wishful thinking, but if there's a massive play here, let's say that this high to this high ends up being this big head and shoulders position on Netflix, and this position starts to break down. All of a sudden, we come back into $500. Look, this structure to this structure, I'm still going to buy some Netflix and try to take it back up to highs. So if I were to own this around $500, that wouldn't be too bad. Okay, so there's two ways that I can play this. I can put in the 201 right here, make $1.43 in credit. It's going to require about $3,800 in buying power, or what I might end up doing is doing a 550, okay, which gives me 370 in credit, and then going out to see, can I add a put as a cheap hedge? And the answer is yes. I could do this. And so right now I have man, that's super, super cheap. Let me see what it's going to cost me if I did a 350. Okay, 340, 292, 330. That's a 1 delta. So 292 is my mid price. Bid is 226, mid 292, ask is 358. If I can get this thing filled at 250 or better, there's an income play here for $250. If I were to take any assignment, I would get assigned at 550, which I'm actually fine with that, because if I went out 30 days, okay, and I get something around the money, I can get $25 to $30 of income for a $30 covered, or a 30-day covered call. So I'm not worried about getting the assignment here. I could obviously roll, but I would do a 600 by 595, sell the 550 as an assignment level, and then as some type of volatility hedge, have this very cheap, inexpensive, long 350 put. And this may not gain in value, but this should take away some of the outlier risk if I increase this. Let me go to 3 contracts here. $4,300. I'm going to try to get 250 for this with an outlier hedge there on 2. This is fine. So I'm going out to the end of this year. I do like this trade. I'm going to try to get filled for 2. Let's try to get 250 if possible. Filled at 251. Okay. Couple other income plays here. All right, so that trade is in. So that is Netflix. That is a 12/20 expiration. So buy the 600, sell the 595, sell the 550, and then buy a 350. And I have 3 of those. These are all ones. Got filled for $2.50 credit. So it gives me $250 of tail credit. That gives me a max profit. If it stays above 550 but gets below 595, I've got a that'd be 500 plus the credit. It'd be about $750 trap profit, and then willing to own shares. And that break-even price would be an assignment at 550 minus the 250 minus the $5. That would be an ownership of 542.5. 542.50. And I would quickly and very quickly actually try to lower the cost basis down to $500, which one 30-day covered call could possibly get me down $20 to $30. I think after 30 to 60 days, I could ship that price down to maybe $500 or less. So I am going to throw that in as another alert. Willing to own. Pop in that alert right here. And then I'll throw in a screenshot. Netflix. We're starting this at 600 down to 550. Okay, so ideally, I'd like this break-even level to be all the way over here towards about $500. So this would be optimum break-even price, $500 or lower. And in this area, I'm doing a 600 by 595 bear put spread, doing the 550 sell put times a 350 buy put hedge. So that reduces the buying power and the exposure if there's some type of crazy vol event. I mean, Netflix has had some pretty incredible swings, earnings wise. And so if we have a, terrible earnings report, this thing could probably drop $40, $50, $60, which right now I'm $105 from current price. So I'm not that worried about it, but I definitely have some exposure if I have that naked put. So I'm hedging that with the 350. All right, let me take a screenshot of that right here. So that is some Netflix action. Okay, so Netflix is in, MSTR is in, CMG is in, Costco is in. Costco, I took 2 trades in Costco today. These are all posted within my stock. Well, it's actually my alert service, my Pulver package alert service that I'm doing through A1 Trading. So I have that all posted in my Discord channel under education. So if you're interested, here's where you get the full details there. If you come into my Discord, go into education updates, I have my a1trading.com/pulver alerts. I've got the link right here. And then also my $100 challenge. I'm trading live with students every single day. So a couple ways to participate for some daily income, for some signal alerts, and all that good stuff. And that's stocks, options, futures, FOREX, and even crypto. Most of my crypto is honestly going to be dollar cost averaging, and it's going to change quite a bit because if I can start incorporating options around my crypto positions like IBIT and BITO, that makes for a nice way to track the net result. Would I say Meta's going down from here? Not necessarily. I think Meta is another stock that I'd like to see Meta drop, to be honest. I think, ad wise, and the one thing I don't want to see Meta do is what they did with the metaverse stuff. I know that they switched from Facebook, which was ticker FB. That's why it was a Fang Man. Now it switched to Meta. But that was actually a smart play. And then this recovery was a lot of the company just makes money. I mean, if you look at where we're at, let me look at the not that stock. Here it is right here. If I look at Meta, Let me see what their fundamentals say for their, actual like price to earnings, price to sales, what's the discounted cash flow. So, I mean, they check a lot of boxes here. Insider selling is not a good thing. However, they are a cash freaking cow. And I think that's part of the reason they're so good. Even this, I mean, price to earnings ratio at 27 times, that's dirt cheap for some of the other, like story tech that everyone's buying out there. Price to sales at 9.5. I mean, the fair value is $730. So, no, I don't see Meta having to go down. I'd like it to go down. I'd like to say that we get a discount at, let's say $450 to $400. If that's offered up, I mean, think about this. And this may not be tested, but if we test this level here, straight over, or we just look at this as a low to a high, I'd love to see a pullback, right? Before we continue to go higher. But if we keep going higher, 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 there's ways to express a stance without taking ownership, buying something incredibly high, and hopefully, having some type of discount where if I do take any shares of, Meta, it is at a price that I want to own it. So I would say this: if I want to own Meta, I'm going to try to position it for something around $400. The issue is Meta may not be high on the IV scale. It's 62. No, it's 19.7. I'm not going to get squat for going out and selling some premium here, but let's find out. Okay, so we're trading at 565. I would say if I did like a 450 by 445, and then I did something at $400, okay, there's some income right there. So this is only going to require about $900 in buying power, and I could take shares, and I take assignment. If I'm willing to take assignment, I could get $1.82 of income. So by December, I could get $180 on Meta. If price just goes higher, this is easy. Okay. I could go out a little bit further and get $1,000 profit in addition to the assignment there, get $1.37 as opposed to $1.82. If I went, I don't mind this here. Just take my $500, max it out around $600 or $700. If price were to settle somewhere in here by the end of the year, then that would be my max profit at 682 because I'd have plus $5 here, and then I'd keep the premium of the $1.82 here. So if price stays inside this area, which right now is trading for any assignment, we'd have a 96% chance that we're not assigned and that price is going to stay out of the money. So I take those probabilities. I looked at the chart. I verified that technically $400 is a good spot. I'm not saying price can't get there, but I'm saying unlikely that I'm going to get hit and assigned there. So I don't mind it. And that's not a bad way to express. I wouldn't mind taking the trade. Question now is what can I generate for income? So I like that it's not tying up a bunch of buying power. I don't necessarily want to go more than one contract on the sell side because it would be 20 grand in margin to own it. So it's $40,000 in cash, which I do have plenty of that. I've got, $776,000 of buying power. So that's not what it's about. It's mostly, do I want to allocate, 2, 3, 4% to Meta? Sure, but I would be quickly and actively lowering my cost basis to then flip it for a profit as opposed to holding it long term. But if I could own Meta, let's say we go down to $400. Okay, if Meta drops to $400, we're talking about a 28.6% discount. I'm okay with that. For right now to at least repair and flip. And if we come back and fill a gap, earnings on Meta is going to be out to the end of October. By the time we get through October, we get through earnings season. If all of your Mag 7s, all your semiconductors, the broader market shows positive earnings, let's say, optimistic consensus, we're going into November, we get through the election without a ton of disruption, and we're talking about rallying into the end of the year, which the market's going to try to ignore a lot of things to do it anyway. But if we come out of the election without any type of crazy outlier, then sure, I think that Meta can be higher. I see fair value over $700. So rather than buying it at the highs, which I hate to do, I'm just going to express that I want to be bullish on this towards an earnings play, or not earnings play, sorry, options play. But I would take assignment if I was assigned. Let me give you that break even here. My assignment would be I would have $1.80 on the credit. I would have $5, so I get $6. So $6.80 minus the 400, I'd own the shares at 393.20. So 393.20 is probably about a 30% discount. That's pretty decent. What I say, 398 or 390 what? 393. $3.93 from current price. $3.93 from current price. That's around a 30% discount. Yeah, that's not bad. All right, I'm going to place this trade. $1.80. I'm going to try to get $1.80 here. Not filled for $1.80. Can I get filled for $1.79? Yes, not too bad. Okay. That one's not filling for $1.79, $1.78. Survey says filled. Okay. All right, so that is filled. Take a screenshot here. 400 to be the assignment price. 450 is where I'm starting the fun of the bear put spread. So somewhere in here. Stretch this over. 450 by 445. Bear put spread. 400. Sell put. $1.80 credit. Willing to own at 30% discount. Make sure those are the legs. 450. Yep, that's correct. Okay, good. So take a screenshot of this. And there is some meta. Cool. All right. That's going in the Discord as well. That expiration should be another 12/20 expiration. Yes. Dang it. Okay, so 450, 445. So $180. Tail credit, $680. Profit trap. Willing to own meta at 30% discount. Break even would be 393.20. Is that correct? Yep, 393.20. To repair and lower costs aggressively. Okay, so there's some of that action. And screenshot of meta getting posted in the old Discord. There it is. Okay, so that's a little bit of meta. This actually is putting out some trades past earnings. An easy way to generate some profit on all those, by the way, is if price goes higher. Let me change the color. If price goes higher, then this $1.80 probably quickly trades for $1 or less. And either one, I can sit on the remainder of the expiration to take the entire $1.80, or two, I can just take the profit. If I hit a 50% take profit on Meta, on Costco, on MicroStrategy, on Netflix, that still adds up pretty nicely. I mean, that would be a total. If I just did one contract, that'd be 180. So 180 plus 250 plus 190. So that's $6.20. And then also on CMG, actually, yeah, CMG is fine. So plus 2.70. Costco was $5.45. So just on that right there, if all I did was get to a 50% take profit, puts me at $717 with one contract. That's $717 income, no ownership, and hopefully we can hit that profit target pretty quickly. So Francois says, I did answer utilities. Yeah, Discord channel. I'll post that before we're done. I can post my. I have a free Telegram for anybody that wants to join my Telegram. I post there every single day. From this, I mean, I've got a members only for my daily profit play. I have a members only. If you are in the A1 Trading Discord, so for my Pulver alerts, if you're in the A1 Trading community, this is my section here. So I've got my journal with updates every single day: index, commodities, forex, stocks, options, futures, everything that I post. It's all right there. So that's in my Discord under my education updates. There's my kind of all asset alert channel, and then here's my daily profit play $100 challenge, all within this education updates. And let's see, it's also down here towards affiliates and all that stuff. So my Discord, I'll post it. Yep, I'll post it right here. So let's go invite people. So this is my Discord channel, and there's a link to join. If I have a bunch of people joining live right now, then I will put out my typical disclaimer, which is I don't send friend requests. I don't send direct messages. I've already been hit up in the last 2 weeks with probably 50 messages like, "Hey, Chris, is this you? Is this you? Is this you?" It is not me. So unfortunately, it's not happening in my channel, right? It's happening in the the dark web of Discord, which is people that are trying to use my profile with an extra period or an extra L or an extra R or a space or whatever. It's not me. If you want to find me each and every day, I'm right here in my channels talking publicly. So that's why I don't send direct messages. That's why I don't send friend requests, because I just want everything that I do to be out here in the open. All right. So there's my Discord channel that is posted. If you'd like to join my Telegram, let me see here. I think let's see. I'm looking for my Chris Pulver Telegram. That's not it. Looking for it. Hmm. Well, fudge muffin. I know it's in here somewhere. You say you're going to just pull it from Telegram. Channel info. There we go. Let's see if I can just invite you. Here's my Telegram here. You can only add the first 200 subscribers to the channel personally. Oh yeah, there's an invite link. So copy, and here's Telegram. There you go. There's an invite link to join my Telegram. So pick your poison, trade both. Notifications on Telegram, notifications on Discord. Easy way to see the notifications and updates. Whatever I do content wise, it's pretty much all here. Okay. All right, 3:45, just a few minutes before closing bell. Again, price action pretty quiet today. Totally fine. This actually is awesome when this happens as far as some daily income plays. I did have, like I said, 2 SPX winners, 1 ES winner. I've got a couple more on ES to go out to tomorrow, as well as Friday and Monday. I've got some trades running on NDX, same type of thing for Friday and Monday. P&L wise for the day, I did some rolls last week. I'm watching a couple of stocks for that in particular. FXI, I did a roll last week. Pfizer, PFE, I did a roll last week. AT&T, I did a roll last week. And what else? I also think on MO, I didn't have to adjust anything. We're up to 5105. I have a lot of calls, 50 and 5250 on MO that I might end up rolling out again. I just want to see additional expiration. So if I go to MO, right now I can only go out to January, March, or June, and then I've got to go the entire year. So what I'd like to see is more option expirations get sprinkled into MO. This is a dividend play for me, and so I'm hoping I can get a February expiration, get a March, April, May expiration, and start having a little bit more wiggle room on maybe a rolled covered call. And even if I keep the same strike price, we'll roll it out farther, another 30 days, another 60 days, another 90 days. With 1,000 shares, I could hopefully generate an extra $300, $400, $500 a share, lower my cost basis, still keep the dividends rolling in at about a dollar a quarter. which is not too bad to lower the cost basis by about $1,000 every quarter. So overall, pretty decent stuff happening. Baba is up a little bit today. We're up to $90 on Alibaba. Took some profit in this one last week. I had a feeling it would be. I don't remember when my expiration was for Alibaba. It may have been this Friday, but it doesn't really matter. I took most of the profit last week and took a lot of profit on PayPal as well. So yeah, Baba and Baidu looking a little bit better. I've got ownership in the mid 80s, low 90s on Baidu, trying to get this thing up to $1 or $115 would be great. 125 to $130 would be even better. I do like those stocks in the medium to long term, and we will see. Okay, where do I find the trades you're doing at the close today? Well, the trades I just took are all going to be here under this A1 Trading Discord, which is going to be in my education updates for my A1 Trading Pulver alerts. All those get posted in here. So this is my A1 Trading. There's Meta. There's Netflix. There's MicroStrategy. There's CMG. There's Costco. All these trades. So that's there through A1 Trading in that Pulver alerts package. What is the expiry on Meta? 12/20. Am I still trading CLF? I still own some CLF. I'm interested in CLF, but not quite yet. CLF and X, same type of thing. Steel. I think it has good potential, but I'm not ready to buy it right now at $12. Although I could see it being a bargain. We're coming down to this support in 2022 when we had a low. If we have tariffs, that'd be great for CLF. Maybe it might be bad for the overall economy. It'd be super inflationary, but that could benefit something like this. It could benefit Alcoa. It could benefit FCX, which is copper with Freeport McMoran. That could benefit. Right now X is United States Steel. And this one is pending this big takeover by Nippon Steel in Japan. And it keeps getting extended, but it's not really approved yet. I'm just watching these levels because I would love to buy, something like $20 or less. And even if it's a range trade from 20 to 50, that's still a heck of a trade. Carlo, that's correct. Yep. And you can click on that alerts. You can click on the alerts thing and see what it's all about. So it's free. It's a year service. So I don't just trade for free. If I trade for free, I trade for me, but if you're wanting to follow me and follow what I do, then, I give you every trade I can for, I think, a pretty fair and reasonable annual fee. Right. But X and CLF, I'm watching closely. I would like to buy both of them if we come into these yellow zones. So I'm not just, I still have shares of CLF. My break even is in the low teens, so it's probably just upside down a little bit. This wouldn't be a bad spot to kind of re-up a campaign. The problem is, I don't know what the credit situation is. CLF has an IV of 79. However, where could I go out and actually, if I said, okay, I want to own CLF at, $8. Well, if I go out let's go out 90 days and look at an $8. If I want to sell an $8 put, I'm going to get 14 cents of credit to own the shares. No thanks. So for me to tie it up and say, okay, it's going to tie up $800, it's going to tie up $900 and $1,000. I can get $1 of income for something that if I get assigned any shares, my break even's $9, and I'm tying up almost $3,000 in buying power for something that might make me $100. So what's $100 divided by $2,700 in buying power? I make 3.7%. Yeah, so I'd rather just, if it comes down to the level that I'm really attracted to, then I will just buy it. But I think, I prefer to get into things when I can just set the options prices that I want, get some credits and income that I'd like. And if it signs me, fine. If it doesn't, that's fine too. So anyway, right now I'm sitting on Oxy, for example, and I have an expiration out to October. I actually, you know what? I do think this might be something to probably to look at tomorrow. So I have some shares of Oxy, OXY. It's Occidental Petroleum, one of Buffett's big energy plays. But the assignment was at $60, and then I have a 57.50 put. Now that's a hedge against current price. So what I'd like to see here is if we are down through these lows, if there's a little bit more downside, I'm hoping I can take that 57.50 put and continue to manage that down to a break even into the low 40s. Now, that might be wishful thinking because if oil goes higher and Oxy or OXY goes higher, then I'm going to be giving up some of that value in the long put. Now, what I need to check on right now is if I were to take assignment right now. So I believe on that initial credit for OXY, I think I received $1.37 credit. Okay, so my break even right now is $1.36 minus 60. So I have a 58.64 break even. Okay, 58.64. Now, plus $1.36, so $6.56 out of $60. I could take the shares right now for $53.44. Now, what I need to look at is there's earnings on November 5th. And what I'm trying to do is, fudge, my expiration is out to October, so I can't really wait through. I can't wait through earnings. What I might end up doing is if I take the assignment now and I go out, let's say 25 days or even to the 25th and try to put on a quick repair, let me see what that looks like. So if I did a 53.44, I could do a 54. I could do a $54 covered call for $1.15. So that takes another $1.14 away. Fudge. So 53.44. Let me add this all up. So I have $1.36 plus 6.50, 6.20 plus $1.15. So I'd have 871. I'd own the shares at 51.29, get them called away at 54. Okay, I think I'm going to do that. Let me see if I can knock this out. I might not do this for every account because I might not get it done in 6 minutes, but I should be able to. So if I can get in the accounts that have some assignment here, I'm going to take off this long put. So I have the long put right now. It is trading for 515. And if I do a 57.50 minus 52.30, I should be able to get 520 real value. I should be able to get roughly 520 for this. So if I get 520 for this, filled at 520. All right, now I'm going to double check these really quickly. So I've got the 57.50, try to get 520, 520. Okay, very nice. This account here, close full 520. 520 got filled. Let's see. This one, yep. So close full 5.20. Filled there. And then the other ones just have some light exposure. So this one just has shares. This one just has shares. Okay. So now what I'm going to do on the shares that I have, I'm going to go out to the 25th and I'm going to repair this trade for my break even is now. I just closed for 520. So I've got $1.36. Let me do the math here. 60 minus $1.36 minus 5.20. And then a covered call is $1.34. I own the shares. Dang it. 60 minus 136 minus 5.20 minus $1. Looks like $1.36. Nope. I take that back. Minus, let's go 85 cents. So I own it at 52.59. Take it away at 54. I make $1.41 on 500 shares. I'll make $7.05 to flip this stock by the 25th. So that's what I'm going to go ahead and do here is sell a $54 covered call, 1, 2, 3, 4, and see if I can get, let's see if I can get 90 cents for this. Not feeling it 90 cents. Let's try 89. Okay, the bid's at 87. Let's try 88. filled 88 cents. So there, similar order. Okay. So 5 contracts, 9732, filled 88 cents. $9,111 filled, and 151 filled. Okay, so now in my OXY. All right, now I get to update. So here's my spreadsheet, and I'm just going to do this update. The trade's already done, so this is good. 3 minutes before the close. Now, what I'm looking at is added 10.25 expiration, $54 covered call. So I have assigned at 60, 1.36 credit spread, 5.20 long put, and 88 cents covered call. So that break even gets updated to final answer 60 minus 136 minus 5.2 minus 88, 52.56. So that would be $1.44 net profit per share. And I've got 500 shares. So that would be $1.44. It's called away at 60, make 744. I'm sorry, that's way off. Nope. $1.44 times 500 makes 720. Okay, so if I can get OXY, and one thing that I'll be watching for is by the end of October, let's say that OXY goes lower. Well, what I might end up doing is I'll go out through earnings and I'll buy like a $44, $43, or $42 long put and just hedge this thing, because if it goes up, no problem. Okay, if it goes down, I want to make sure that I can still lower my cost basis and make this very inexpensive. So I'm essentially working with $720 of profit. And let me see what this is going to cost me if I go out and hedge this bad boy. I've got 1 minute, so I'll probably end up having to do this tomorrow, but let me look at the option legs here. If I go to the 1st or the 15th, so we have November 5th earnings, November 15th, I could buy a $40. All right, I'm going to do this. I can't do it now, but I'm going to basically buy a $40 put. It's going to cost me $100 because it's 20 cents. So 19 cents times 5 contracts, it'd be $1. That dollar would be $100 against my 720 of profit, but I'm protected a bit to the downside to at least mitigate some of that risk. So let me make a note to myself that I can do that tomorrow. Where'd that go? Spreadsheet went somewhere. There it is. Okay, so I'll make this a note. Need to add long put to protect through earnings. There. And that way, if price goes lower, I want to make sure that I'm protected to any additional downside. So if I turn a 20-cent debit into, let's say, a 50 to 70 to 80 cent credit, I can take the net position, actually lower my cost basis even further, and still be protected. But then, of course, I'll be working my cost basis down, trying to own this thing as low as possible. So anyway, but if it goes up and it gets above $54, then I get it called away. I waste the money on the long put. Rather than making $720, I make $620, and it's fine because I'd rather protect the downside just in case. All right, AAL, is that American Airlines? Yep, American Airlines trading at 10.99. So I do have some exposure on AAL. I have several puts, and that's about it. So here's my AAL right here. I have $8 puts, and I stagger them through different expirations. So I have, let's look, it looks like June of next year, July of next year, and December out to 2025. I'm going way out there for an $8 put. I generated $1.74 of income. I know it's way out there for profit, but I don't really want to just own shares. Okay. What I'm looking for is, let's say this thing crashes down here. Well, if I take the $8, okay, and I'm getting $1.74, I can at least lower the cost basis down to $6 and we'll say 25 cents. So if I were to take any assignment of that, those $8 puts, I would own the shares, break even at 625, which is pretty much at the all-time lows. And I'm not saying this is a good or a bad thing. I mean, JetBlue, I've been sitting on JetBlue at like $5 or $6 for over a year and a half or 2 years. AAL, it's like, airlines are very cyclical. If we ever see a bit of a slowdown in travel, but if I'm going to own airlines, Delta's probably the only one that I want to own. SkyWest is the other one I want to own. But yeah, I mean, I've got exposure, but it's, ideally it's like, yeah, I'll own it at $5 and see what happens. But JetBlue's done the same thing. Okay. This is TradingView. Yes, this chart you're seeing here is TradingView. Yep. Okay. All right. Any questions for today? Nice little final hour for the last hour of the day. I'll do this every day, 3 to 4 p.m. And I guess I'll see you tomorrow. So tomorrow morning, daily profit members, I'll see you in the morning. I will start around 9 a.m. And after this, I will probably rip out a little bit of video for TradingView, push that out on YouTube and TradingView, as well as Twitter. I think those are the 3 platforms I can push. So TradingView, YouTube, Twitter, and just throw a little video out there, maybe 15 minutes or so. That'll pop up automatically in my Discord channel. And that should do it. So pretty active day overall. I mean, added some positions. They're not necessarily short term. Short term, I'm doing SPX, NDX, ES, NQ. I'm doing a lot with like futures and index related plays, just for some income / hedging. Otherwise, I'm still looking out at like healthy stocks. I posted this in my Telegram earlier today. I just did this review of about 40 stocks. They're liquid, trading with average volume over 1 million shares. They're profitable. They have positive growth outlook. They have high price targets that are, $20, $30, $50 higher. There's a lot of inside buying and holding, which is like, ownership. So instead of the CEO of NVIDIA selling shares to the tune of $300 million, or the insiders at, these stocks that have ran for the last 1 or 2 years and they're sitting at these all-time highs, I want to see, what companies are still having their insiders hold stock or buy more of the stock. And also, they're optionable. So that way I can take some trades. I don't necessarily have to just jump in and buy the stocks, but I want to see what looks good. So there's a list of 40 there that I'll be reviewing. They all make money. That's a good thing. So earnings per share, earnings outlook, earnings are forecasted to grow. That's a good thing. And I think that to me is a healthy balance sheet moving forward, as opposed to, I hope it goes up. I think that's a terrible outlook. That's part of the reason I couldn't play Intel, although Intel has jumped up a couple of dollars per share. It's valued at like $4. I'm just not interested at a $22 stock price to potentially trade down to 10 or 5 or whatever. And I'm sitting here stuck holding it because I think it's going to go up. So anyway, so more analysis on my side, and we'll talk about it more this week. Upside on Palantir, yeah, I've got some exposure on Palantir as well. It's up to 37.95. I have some credit spreads that are still running, and I think I took the credit spread out through the earnings this season intentionally. Let me go to Palantir for a second. PLTR is right here. So I have the 36/35. When we had that big sell-off in July and August, I also did some ratio spreads. So I did the $20 naked put, $17 put, 15 and 13 puts. I mean, I've got some ownership levels that I would say right now they're way up in profit, and I'm just going to let them expire for now. Palantir has fair market value up into the 40s. I will look and see what those puts are worth, because if I collected, let me see what I got on those. I think I grabbed several dollars of income, but if I sit on it, let's go. So I have $4 of total credit. So if I get $400 of income, great. If it's already trading at $2 or less, I can just take the 50% profit and move on. But I also, for those like longer term, cash secured puts, I like to get like 50% minimum, 75 to 80% is pretty good. 90% is ideal. But yeah, I think Palantir has good upside potential. The 36/35, if we have a bit of a fall, I'm going to use that 36/35 and then take ownership, and I'll just start the campaign on Palantir earlier. So I'm going to look to see if I can own it and try to get it as close to this trend line for break even as possible, and then try to target that $40 to $45 price target for my exit for right now. So that's what I think on Palantir. Okay. A1, yeah, just if you're in my Discord there, Carla, just go to my announcement page. If you're in my Discord, right in here on my education updates, so it's the top channel that I have. There is my a1trading.com/pulver alerts, and then there's a link to it as well, so you can check that out. Cool. All right. It's not intrinsic value, Liberty. It's the fair market value. So using a discounted cash flow model, their fair market value is around $44. So that's another kind of snowflake analysis thing where I see this PLTR, and it checks a lot of boxes here. Well below estimated values, earnings forecast to grow, became profitable. It's starting to get a lot of recognition. It's now in the S&P 500. It's this interesting space between optimizing AI, optimizing even like defense. I mean, we've got defense and aerospace. We've got companies that have been partnering with Palantir. So I'm not like crazy. I mean, look, that's an insane price to earnings ratio and price to sales ratio. But when I see fair market value is over $50, it's undervalued. It checks a lot of boxes on the analysis. I'm going to take my chances of something that's getting a lot of order flows now that it's in the S&P 500. So, and I couldn't tell you anything about these other companies between Cadence Design, Synopsys, Roper, and Workday. Workday I've heard of. I've seen it on some golfers' shirts on the PGA Tour. But Palantir is I've been reading more and more about just how good of a solution it is and how it's helping companies improve their bottom line. So yeah, I'm for right now not outright buying it because I think it's been up and overextended, but I'm expressing how I want to buy it or own it with a an options play, which is if it dips lower, I have a credit spread that I can own it. If it goes higher, then my credit spread's in profit along with all my puts are in profit, and I just collect the income without ever owning the shares. Okay, cool. Yep, fair market value. Got it. Okay, cool, everybody. Thanks a lot for being with me today. I will see you all tomorrow. Okay, I'll be live for the final hour at 3 p.m. Daily Profit Play members. I'll see you in the morning at 9 a.m. Thanks, everybody. If you'd be so kind, if you're watching this on YouTube or Twitter or anywhere else, I mean, any type of like helps. Certainly on YouTube, if you're subscribed to the channel, fantastic. If you like the videos, leave comments. That does make a huge difference. So my videos pop up while live and also during recording. So when people are on the YouTube channel, if they're interested in anything investing, anything trading related, that my little video can pop up on the right hand side. So that'll help. So those little